And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge Show, the show where we bring you where the action is in the broader markets. As usual, we have lots to cover. Let's go ahead and start by taking a look at some of that news that drove price action last week. We did get weaker than expected economic data by way of the employment report as well as the inflation report today, and that's good news relative to the possibility of an interest rate cut. Next week is that FOMC meeting, and we'll talk about that, what impact the thinking that we will see a rate cut next week has had on the markets this week. We also had other news items driving price action, most notably earnings still very much taking place. We are at the very tail end. This is when a lot of the retailers come in with their numbers, but other areas are also reporting strong earnings, and we are seeing a response. So we're seeing a little bit of rotation within those industry groups. And also we did see volatility drop last week. It's down at 15. So anything below 16 is viewed as non-concerning. That fear index is now deflated, which is good news for the markets as well. And consumer sentiment came in slightly lower than anticipated, and that was also, we're in a period where weak economic data is good for the markets by way of a reduced interest rate outlook. Again, next week, as far as news items and data do, we are going to hear from the FOMC on Wednesday to, of course, hear about the interest rate policy going forward. So from here, let's go ahead and take a look at these markets and see where we stand. And here we are with the daily price chart of the S&P 500. The overall index was up about 0.5%. We had a relatively flat week, certainly compared to other periods this year. However, beneath the surface, a lot going on. With the S&P 500, we are back in an uptrend, and we do have a positive RSI and a positive MACD. So we are seeing constructive price action, certainly in the NASDAQ. We'll take a look at that as well. And it too was up slightly, actually a little less than 1%. We can see a positive RSI and a positive MACD, and we are now back above these key moving averages. Let's take a look at the S&P 500 again, because we are most notably very close to this late October high, and that is the only area of possible upside resistance. We will want to move back above that, ideally on heavy volume, to confirm that this new uptrend is very much in place. So from here, let's go ahead and take a look at those underlying 11 sectors in the S&P 500. Want to make sure you're very aware of where that relative strength is taking shape. This is those 11 sectors sorted by strength, relative strength, in descending order. So up here at the forefront, we do have XLC very much back in an uptrend. This is the communication services sector. Most notably, we had quite a move last week in Meta Platforms, 3.9%, and that certainly gave this area a boost. We are on the cusp of a nice 8-week base breakout possibility, but it is firming up quite nicely. From here, we can take a look at other areas. I talked about interest rate sensitive areas that are faring well, and certainly financials would be in that category. This is XLF. We're going to take a look at sub-industry groups within financials this week, and I'll share with you a couple of names. The group overall was up about a little more than 0.5%, but industry groups beneath, some of them were up quite a bit higher. So from here, we're going to look at these other areas that had been down in that lower quartile. This is Technology XLK, another top performing week, up 2.5%. We're going to take a look at some of those sub-industry groups and other certainly in compelling events that are taking place beneath the surface in technology. We are now back in an uptrend after this week's rally because we're back above that 50-day simple moving average. We have a positive RSI, and then we did have that nice black line up through the red bullish MACD crossover, which then trended into an uptrend. So looking good here in technology. You do need to be a bit selective, but overall, we do have that sector back up here in the forefront as far as exhibiting relative strength. Here's consumer discretionary, another area that fares well in a declining rate environment, simply because it is cheaper for consumers that are using credit to purchase goods. So we have XLY up here. It was up 1.3%, and we have a nice positive RSI, and that MACD now up here in positive territory. We're going to dig into, again, a couple of names in that retail space that fared well last week. Industrials, another interest rate sensitive area, and certainly economically, as far as growth or weakness, it is going to be sensitive there. XLI up a little more than 0.5%, didn't have a stellar week, but again, there are pockets of strength within the industrial sector. I can tell you with my MEM Edge twice weekly report, we have 3 stellar names that are from the industrial group, really exhibiting superior outperformance and poised to trade higher. So if you haven't already, use that link below. You can experience a free 2-week trial of my twice weekly report. Moving through, taking a look at healthcare, which had been leading for quite some time. We did see a pullback last week, very orderly, however, to this upward trending 21-day simple moving average. We do still have a positive RSI and a positive MACD. In essence, it has allowed this sector to move below an overbought position. We had that RSI up there above 70. So again, a very orderly pullback for those of you that have been waiting to potentially get into some of these bigger, better names in healthcare. This could be an ideal opportunity. As we move through and take a look at some of these weaker areas, it is going to be REITs and utilities. These are areas of the market that are comprised a very small portion of the S&P 500, so not as concerning. However, of note, if you are overweighted, certainly in utilities, you can see that we're back below that 50-day simple moving average. We have a negative RSI and a negative MACD as well. From here, we're going to take a look at the sub-industry groups within these sectors. And again, 2-month daily price chart view, sorted by relative strength in descending order. So let's take a look. First up here, I talked about financials, and in particular, we are seeing a nice move in bank stocks. This is KRE, the regional banking ETF, up almost 4.5%. We're going to take a look at a couple of names in there. And again, that rate decline possibility is one of the reasons. As we take a look at individual stocks, I'll share with you several other reasons why we're seeing vibrancy in bank stocks. Biotech still sitting up here quite nicely. This is very much in line with that pullback in the overall healthcare area, just back to that upward trending 10-day simple moving average uptrend, still very firmly in place with those biotechs. Consumer discretionary, I talked about that faring well in a declining rate environment. Here we are with XRT, the S&P retail ETF, had a very nice week. And again, I talked about earnings. We're going to take a look at some of those better looking names that certainly fared well last week. And technology, let's take a look at the SOXX. This is the semiconductor ETF, up almost 5.5%, and we are poised to hit a new high. We've seen nice resurgence in many of these semiconductor stocks, and you can see we now have a nice bullish MACD joining that RSI. So we're sitting up there quite nicely with semiconductors. And then also, I did want to share with you another area that had a very surprisingly strong move last week. This is software, and I use IGV, the ETF, to stay on top of this software group. We're going to take a look at some of the bigger holdings in there, but take a look. We were up 5%, some of that earnings related and otherwise, but we now have a positive RSI. And this is an area of the markets when it gets going, provided you are in the right names, it can really outperform the broader markets. And from here, we can take a look at weaker areas, and this XHB is home builders. Despite a declining interest rate environment, the fundamental numbers just are not there to support a continued pronounced move. We did see XHB fare weaker than the broader markets. From here, let's go ahead and take a look at some of those retailers that fared well last week. First up here is Dollar General. They came out with their earnings, and in response to very good numbers, same-store sales were quite constructive. And then also the company guided their growth outlook higher going into next year, and investors liked what they heard. In response to those results, we did see this gap up into a base breakout. And when you see this type of base breakout pattern on earnings, it is well worth paying attention to, because oftentimes you can see further upside. I'm going to go ahead and draw that arrow, because particularly given that we had very high volume, it's not always going to take shape. We did have a gap up back in this period. However, analysts like what they heard. We certainly are in an overbought position now with that RSI sitting up there at 85. I would look for a period of consolidation, but certainly very keen interest in the stock. From there, we did see other companies in that retail space that reported earnings, certainly discount retailers. We can look at Dollar Tree, another company that came out with earnings not quite as compelling, but equally strong, into a base breakout in response. And then again, nice high volume. Another company that did report recently, not so much last week, this is going to be from a couple of weeks ago, but it is in line with that discount retailer theme. And here we are with ROST stores. They announced back here at the end of November this gap up and into a bit of a continuation rally, but certainly standard to see this type of back and fill price action, given that we are overbought. So at some point in time, we can expect another leg up potentially. And then TJ Maxx also reported very strong numbers, nice high volume here, and the stock pulled back very orderly to its 10-day simple moving average. I'm just going to mark this up very quickly, because I am seeing a bit more of this type of chart formation. And when you do see it, it is worth paying attention to. This is a high, tight flag formation where the stock hits a new high and oftentimes pulls back, sometimes to this 10-day simple moving average. And then when the stock, or if it does have a day, such as TJX today, you are going to be on the lookout for that flag base breakout and ideally get back above the highs of that flag formation, but compelling certainly nonetheless. From here, we're going to take a look at an area of the market that really suffered in November, and that is AI-related stocks, certainly those that had elevated multiples and had fallen back. However, last week we did see renewed interest in a number of these names, and we're going to take a look. It has everything to do with a move back into AI names. And that move back is all about companies continuing to come out with earnings deals that are AI related. Very vibrant area as well. So here we are with OKLO, and this is an alternative energy, nuclear energy company. And we can see that the stock has moved back above its 21-day simple moving average. Pretty decent volume here on Thursday. I'll go ahead and mark up a couple of other characteristics, as well as what I would need to see to experience renewed interest. Here we are with that MACD crossover. That's that black line up through the red. It is often a signal of a new uptrend. However, you will want to marry it with a bullish RSI. That RSI is sitting up here at about 53, but certainly most concerning for me at this juncture is that we are still below this key 50-day simple moving average. I will need to see a move back above this possible area of upside resistance, but certainly compelling. We're going to take a look at a few more names here that have picked up a bit and also talk about what areas of the market they are in. Here we are with the semiconductor stock NVTS. And again, focused on those names that had these explosive moves that really put their RSIs well into overbought position up here at 90. And the company is partnered with NVIDIA. They are very much a key component in the AI space, and you can see this deterioration that took place from October into November. So then today or on Thursday, we did see a move back above that 21-day simple moving average RSI inching into positive territory, and then that MACD crossover again, keeping your eye on that 50-day simple moving average. Another energy company. Now this one is more compelling to me because they have earnings, very strong earnings, and a very strong growth outlook. This is Bloom Energy, BE, again, pulling back with that move away from some of these elevated AI stocks. You can see we're back above that 10, 50, and 21-day simple moving average. We have a positive RSI, and take a look. That MACD crossover did take place, pretty decent volume. So again, we are seeing renewed interest in these areas that had really done well going into October. Here's QBTS. This is a quantum related stock. And again, that pullback and then this nice potential right side of a base formation taking place just at that 50-day simple moving average. We did have that MACD crossover. We'll take a look at another a quantum related stocks. IONQ is the ticker symbol. And here we are, very similar as far as getting into that very overbought position, a secondary rally attempt, but we didn't have a confirming RSI, and then a sharp pullback. Here we are back above that 21-day, and again, that MACD crossover. So you're going to see a lot of the same by way of formation on these charts, forming the potential right side of their bases after experiencing a sharp sell-off. Here we are with PEGA Systems, PEGA. It's all about AI workflow automation. And then we'll take a look at AEHR. This is a smaller name that is also coming back to favor potentially. So you will want to keep an eye on it. It is a theme that is very worth paying attention to. So many of those names did get hit, and they are potentially coming back. Let's take a look at some of these software names. We talked about software having a pronounced move. Here we are with CRM, and I'm highlighting this name not because the chart looks terrific, but because it is a very heavily weighted component in IGV, that software area. So we did have strong earnings, high volume on that gap up, and a move back above that 200-day. Simple moving average, a positive RSI, and a positive MACD. Let's take a look from here at another software name, and I'm talking here about companies that came out with strong earnings. Here we are with Path. It's a smaller stock, but the company does provide robotic process automation, and it's all about taking over mundane tasks, and they've seen explosive growth. Here's that gap up, heavy volume. Also taking a look at Oracle, ORCL, and as you may recall, the company had a huge gap up on earnings back here in September and fell out of bed. We did see a rally this week. They are due to report their earnings on Wednesday. So you will want to keep that in mind if you are looking at the stock. But this move this week is all about analyst upgrades going into that earnings report. There's a sense that it got a bit oversold. We can see that RSI down below 30, and we did see that nice MACD crossover. Certainly one to keep on your radar. I also wanted to share with you other areas. We talked about bank stocks on the move higher. I'm going to, from here, share with you some of these regional banks, and they're going to be a little bit larger. I like that higher liquidity and the visibility as far as their fundamentals. And here we are with Key Corp, not particularly early, but we are experiencing a nice 2.5 month base breakout. The company does have a 4.2% yield, and it's trading at 13 times. So certainly one of the cheaper names. Let's take a look at some of these larger money center banks. And Citigroup is by far the top performer by way of relative strength. We can see this nice base breakout into an uptrend. This is all about a turnaround program that is really taking effect very positively, and the stock is seeing buying. Wells Fargo is another name, WFC, into that base breakout earlier this week and an uptrend. We also want to share with you RF, and this is Regions Financial, and the stock is a little bit earlier in its advance, but we are in a nice confirmed uptrend poised for a possible $28 base breakout. The stock is a 4% yielder, and it's trading at 11 times. And bank stocks normally trade anywhere from 11 to 15% with their multiples, but that 11 is certainly relatively low. EWBC is another regional bank trading at 12 times, and it does offer a 2.1% yield. And we are on the cusp of this nice lengthy base breakout, nice double bottom formation as well. And that's it for this week. For those of you that haven't already, go ahead and hit that like button if you like what you've seen. And also be sure and use that trial button to take advantage of my 2-week free offer for my twice weekly MEM Edge report. Also included are alert reports, which I have been putting out more frequently given the current volatility in the markets. Have a great weekend. I'll look for you here again next Friday.